protecting Main Street from Wall Street. It's time for Money Unleashed with Eric Johnson and Kyle Allyn.
You have to have a plan where you know if the market's going to go up, what happens next. And you also have to have a plan where if it doesn't go the way you think, you know what you're going to do.
It's time to put you back in control of your money.
I'm not trying to predict the weather, which is kind of what we're talking about, right? It's predicting the stock market. I'm trying to build a better boat.
This is Money Unleashed with Eric Johnson and Kyle Allyn.
Welcome to the Money Unleashed podcast with Eric Johnson and Kyle Allyn. We are the vice presidents of Hoffman Financial Group. We've got new episodes for you on Monday and Friday. Be sure to subscribe wherever you get your podcasts. Kyle, it's the new year. We got a week under our belt. How are we feeling, man?
Man, we're off and running, right? We've got all kinds of major topics in the news.
Lots of stuff going on.
Lots of stuff going on. I guess I was in the gym. I was working out with my trainer, and he's an ex-Marine. And he looked at me and he said, "We just attacked Venezuela." And I went, "Oh," right? So it never stops. It never slows down. I think one of the most amazing parts about this job is the economy is the measure of all these people and the things that they are doing, and there's always so much going on. So I've hit the ground running. I'm excited. I feel like it's going to be a great year. I don't know why I have all this optimism, maybe because it's new and refreshed, but I feel so blessed that I work with a group of people that I enjoy. I work for a group of people that I enjoy.
Yeah.
Like it makes me want to go to work. It makes me want to do things. I think, when we come here on the show, it is a lot of work. It takes a lot of preparation. There's a lot of people behind us that are making us look good and taking care of us. But it's such an amazing thing to be able to be a part of the conversation.
Yeah, I agree with you. I really love coming to work. Our team is second to none. So big shout out to Hoffman Financial Group and the whole team. Like, you guys are the best. But, our clients are also amazing as well. And the good news is because we have such a great communication line with our clients, we can give them that clarity as to, if something happens geopolitically, what's that mean for their portfolio? And that's the best part about my job, and in my opinion, is because we get to have those conversations and help people with the unclarity of it all if you do watch too much news. You can watch too much news. It's possible, but I agree with you. And what we want to talk about first, right, is are we getting too bullish?
Yeah,
right?
Like we just said optimism. So
yeah, optimism.
Are we too optimistic?
Are we too optimistic? Are we too much on the good side? Well, let's see, right? Because Savita Supermanium, she created basically a chart to see, hey, should we be buying? Should we be selling? Is this bearish or is this bullish? And she's created one for the past 15 years. She made this back in 2009 because the market was too bearish, and she built this to look at a contrarian view.
Let me stop you there. Tell everybody what that means, right?
Yeah, I was just about to elaborate. So contrarian, what does that mean? So if Kyle and I are bullish, the contrarian view would be everyone else is bearish, right? So,
and then we'll throw this in there, right?
Yep.
So we talk about this, I don't know when the last time I've said it, but do you know the reason we use the bear and the bull?
No.
So the bull's got the horns, so the horns are going up. The bear's got the claws are tearing down. Now, what is the animal you never want to be? The hog, right?
The hogs get slaughtered.
That's
Yep,
right.
That's right.
Back to your point.
Yeah, no. Listen, these are just things that, in this world that you just know, right? Bulls make money, bears make money, hogs get slaughtered, right?
That's right.
Well, what they mean by that is don't be too greedy. Well, what Savita is talking about here is, throughout the course of the past 15 years, there have been instances where we have been too bullish and too bearish. And, usually when this chart, kind of converges on these numbers, then it's indicating that probably a sell side might be coming up in the future. That's what she's saying right now. I don't know about this just yet. I mean, possibly another year or two, perhaps, in my opinion, but this is just my opinion. But, we recently read that, she thinks that S&P 500 is going to have a 4% gain next year.
Well, so I'm going to pause you on that because I thought about this as I read it. If you were able to today just lock in a 4% gain for the S&P, right?
Yeah.
No questions asked, would you take that?
Or what? Risk the fact you
I'm
could
just
have
saying
3 or you could have 20?
Yeah, I'm just saying you're locking it in, right? So we know some statistics, right? So every year you've got the 95% probability of a 10% pullback. We know that in big pullbacks, we're talking 30, 40% drawdown that may even metastasize into something like 50%.
Sure.
Right? On the other side, if the market's really good, you're up 20%, which we've seen for the last couple of years. If you could just lock it in right now, here we are in January, and you could just say, all right, at the end of the year, December 31st, we're up 4%. Would you take that?
No, because I think we're in for a 9 to 10. I wouldn't just take it like, hey, 4% and let's give up on the rest. I believe that we've got a lot more going on in a better space than that. So, no, I would not take it, personally. Yeah. What about you? Would you take it?
Gosh, what a great question. Even as I asked it, I'm like, what is my own answer?
Gotcha.
It sounds rough to say that we only had a 4% gain. I think one of the things that starts to get into my thinking is that we've had these major gains for the last 3 years. the market doesn't run 20% every year. That's
No,
not
it
how
does
the stock
not.
market runs. So we've seen these major gains.
Well, it didn't do 20 last year. It did 16, right?
I just
Which is
mean-
a little closer to normal.
Right. I just mean the years before it was above 20, so we're in
Yeah.
these really high numbers, right? I think the thing that has my attention the most is expectation,
Sure.
right? So Joe Rogan says that expectation is the thief of joy. As people are going through this process, let's say you retired 2 years ago or 3 years ago or 5 years ago, your expectation has changed. I remember when I first was in this business and people said, I would just like to make 7% return. Now you're having people walk in the door and they're saying 7%,
18.
that's accepted if they're conservative or slow.
Right.
So I worry about that expectation. I worry about people getting to a place. Like, here's a very practical discussion. I had someone come in and they signed up and we were talking about their plan, and they said, if I retire now, I would leave on the table some of my stock options in the companies I work for, but if I wait 2 more years, they probably could sell and maybe make another $1 million. I said, well, guys, you have $7 million today. You're only spending $150,000 a year. I've already told you could double your spending, and you've told me that you don't need or want to. So
Right.
what is the point of another $1 million?
Right. What's that going to do for you?
Right. So back to that greed discussion. I worry about the greed of it all. If I could lock in a 4% return, I guess I probably would, because we've had 3 really good years, and to have the compound would be a positive. I think one of the things that makes me really nervous is when people get really greedy,
That's when you should be fearful. That's what Warren Buffett always said.
Exactly. Like I was talking to, I'm looking at buying a house. I was talking to my realtor about this, and she was like, but I had my best, year last year and the year before and the year before. I said, yeah, well, that's a melt up.
Yeah.
It doesn't mean that this year is a pullback. Doesn't mean that this is the end. It does mean that we all start adjusting our expectations, right? Like if she sold 15 homes and then she sold 20 homes and then she sold 25 homes, well, how many homes do you think she wants to sell this year?
30.
30.
Yep.
Right? So that's the part that makes me nervous. The greed makes me nervous. And so I guess I would say back to her, when I look at this indicator, I don't see anything major there. But I wonder if she was sitting in the room with us, if she would kind of agree with me that she's worried about the greed. So she's locking in this kind of
I do
boring
agree with
year.
greed, though. I mean, so there's a lot of things that move our world, right? When you're in the financial world, one of them's fear, which, we pretty much take care of every single day. Like if the market's going up, people are fearful it's going down. If it's going down, they're freaking out because it's going down. So there's always fear involved. But the greed that's my least favorite of the 7 deadly sins, because greed, that changes people's perspective on how they think about things. Like if you look at the history of the S&P 500, right? Usually like a 10 to 11% gain on an average annual basis, which is normal and acceptable and everyone likes it. But
now.
you're right. I had a guy come in yesterday. He's like, well, I mean, I've been doing 18% on my own.
Yeah.
My follow-up question is, how long have you been doing this?
You know what I've started asking, and I was going to pose this to you today because it's starting to come out maybe the last month. And this isn't just for money management, but this is for me as a person. The question I've started asking is, for what?
Sure.
So I thought about Tom Brady, right? Tom Brady was winning all these Super Bowls. He's such an amazing, I used to joke that Tom Brady was the greatest living American.
Okay.
Like, who's the greatest living American? And I would say Tom Brady, right? He's tall, he's handsome, he's winning Super Bowls, he's an amazing guy. And then all of a sudden his life kind of comes undone.
Yeah.
Right? He loses his family, loses his wife. And you go, well, what was that last Super Bowl for?
All right. What's that to prove?
Like, wasn't he already the greatest? Now, it was probably his ego having to prove that he could do it without Belichick.
Sure.
But that level, and I know I'm picking on Tom, so for those of you that love Tom Brady or maybe the Bucks or the Patriots, give me some room here.
I'm a Dolphin fan. Knock yourself out. Let's go.
My point is, for what? What is the trade, right? Our job is intrinsic value and allocation into investments. So we're essentially saying, what am I trading this for that? How, it's the cause and effect of it all.
Sure.
And so if somebody says, I want to go make 20% this year, I'm going to root them back into for what?
Right.
Would it provide more happiness, more contentment? Would you get more time with your kids? Do you need to go buy something? Like I was working with a client and I just said, okay, who's got an old truck? And the wife smiled and started pointing at her husband and she was like, he really needs a car. I'm like, okay, that's a good trade. If we can make some money and allocate that money to replacing your truck, replacing your car that you've been dragging around
that
for
makes
way too
sense.
long, that makes sense to me. But if you're going to stack it in a bank account so that your ego feels a little better, come on, right? I know we all want to make more money, and my job is to help you make more money. But I want to bring into a logical conclusion and question just to say, for what?
For what? And also how? I mean, I think what you're really talking about is asset allocation. right? Because, I mean, I read an article yesterday, and I don't agree with this, by the way, but it said, oh, you should have a 40-60 portfolio right now. That means 40% in equities and 60%, if we're using the old school, stock, bonds, mutual funds, and bonds, right? So 60% in bonds, which the AGG, which is the bond index, is making, 1% a year? And meanwhile, you got 40% on the other side. So I think it's really about allocation. Can you get reasonable rates of return? What's reasonable? 8 to 10?
Well, it's different for
6 to 7. I know it's different, but I'm saying, like, can you get reasonable rates of return that can compound because everyone likes the rule of 72. Make 8% 9 years in a row, you're going to double your money, right? So that's why people love the rule of 72. But I really think it's about allocation, and how do you get there is making sure you understand what's in your buckets, right? Like making sure you understand what's in your portfolio, and how you get around that is making sure you have a portfolio x-ray. Kyle and I talk about this every single week and why it's so important, and what it really is just looking to see what's actually in your portfolio, what's working, what's not working, what's producing, what's not. And just like any great business, sometimes you have to cut, sometimes you have to add. And the only way to get those types of returns that you're looking for your family is to understand what's under the hood of the car you're driving, right? So everybody, I challenge you to get a portfolio x-ray. Give us a call. Let's get one of these started for you today. They're at no cost and no obligation to you. We can find out how your portfolio is operating and give you tips on how to make a better portfolio for 2026. Let's get this started for you. 404-640-5511, 404-640-5511, or you can find us online at unleashyourmoney.com.
Eric Johnson and Kyle Allyn are investment advisor representatives of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV 2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV 2A, item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.